In this week's episode, I interview Michael Martin.
I can work for my money and I can have my money work for my money. Trading is part of your life, and you find that the way you handle money is probably a reflection of your best relationship with a person or your worst relationship with a person. There are no external solutions for your internal issues. You find that most of the stuff that you think you need outside of your person is necessary for you to succeed, when in fact, it's really just the opposite. The best thing to do is to sit quiet, go inward, and really journal and monitor what your behavior is around making some of these decisions, so that you can kind of get to see on paper what your emotional system looks like. You're very safe when you're sitting with your simulator. You're very safe when you're going through your value at risk calculations with your Excel add-ons. You're very safe doing that. But the minute you have to put on a trade, that's when the fun happens. At the end of the day, it comes down to you and your relationship with money. And relationships mean emotion. Like, you can't escape your emotions. They're at every part of your system. And if you've designed a system, well, then your emotions are embedded in the system. So then you have to think about your trading as not just about the financial payoff, but it's the emotional payoff.
From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges Podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Greetings, ladies and gentlemen. This is Houston, and welcome to episode 15 of Trading Edges. In this week's episode, I interview Michael Martin. And for those who don't know Michael, well, Michael's pretty prolific. He's an author, blogger, editor, trading coach, podcaster, and professional trader. Let me just catch my breath after saying all that. Anyways, he's the author of a fantastic book called The Inner Voice of Trading, and he's also been a successful trader for the past 25 years. But what I admire most about Michael is his tell it how it is style. As you'll find from our episode today, he's not one to mince words. And in this interview, he gives some great insights from not only being in the game, but being around some of the best traders in history. So I especially appreciate our discussion around how Michael came to be mentored and later on became friends with Market Wizard Ed Seykota. Also, if anyone's ever wondered why emotional intelligence is the cornerstone to good trading, then I think that this podcast puts the debate to rest. As Michael said, quote unquote, at the end of the day, trading comes down to you and your relationship with money. And relationships mean emotion. Trading, after all, is just a part of life, and the way you handle money is probably a reflection of your best relationships with a person or your worst relationships with a person. Consider that statement for a second. It just gives me the chills and inspiration when I reflect on that big idea. As always, I hope you enjoy the show. You can find the show notes, transcript, and resources at thetradingedge.org/episode 15. It's really been a true pleasure to do these shows, especially in the service of all the traders out there who are listening in. So if you're enjoying the podcast, please leave us a review on iTunes so that other traders can find the show. Now, on to the episode. Greetings, Michael. Welcome to the show.
Thank you for having me.
Yeah, it's a real pleasure to have you on the show. Before we get going today, I'm just going to introduce the audience to Michael. Today's guest is Michael Martin. He's been a professional trader for about 25 years. He's also an author, editor, trading coach, and podcaster. Michael's written for numerous industry journals and publications, and he's the author of a book that I thoroughly enjoy called The Inner Voice of Trading. I think we'll spend a bit of time talking about that book today and some of its contents. And when Michael has spare time, he also teaches securities and related courses at the UCLA and is also on the faculty of the New York Society of Securities Analysts. And in his extra spare time, he also blogs over at martinchronicle.com. Chronicle spelled with a K, Kronicle. So before I launch into things, Michael, did I miss anything there, or did I cover the high level stuff?
No, you got it all. I mostly teach through my own outfit anymore. The UCLA stuff was great. It was a way to kind of give back to the community and teach through like an open enrollment style environment. I also guest lectured in behavioral finance at Anderson School of Business for a while. That was a lot of fun. And the nicest stuff, I teach commodities there, so it's an elective course for the CFA candidates.
Okay.
Yeah.
And so tell us a little more about yourself. So what's your trading background? How did you get involved with trading? And maybe you can share with us your current approach. I assume you still do a bit of trading. What is kind of your approach and the way that you teach the folks that you coach and the folks that you teach?
So the way I got started was, I was a hard worker. I had my own company when I was very young. I did landscaping when I was younger, and it was all cash. And I wasn't thinking of hiring new people or more people to work with me to kind of leverage labor. I really wanted to work hard, but also work smartly. And so I was just thinking about where would I put my money and make it grow. I wasn't really interested in real estate because it was, it's kind of illiquid. Yes, you can buy and sell houses, but for the most part, you can't just go get your cash.
All right.
So that's how I got started with investing and trading. And then when I was at school, I happened to work in a part of the school that was called facilities management, in like a work-study kind of a deal. And after I was done with my Clark Kent kind of thing, they said, hey, listen, did you know that we are the third largest landlord in all of Manhattan besides the city proper and the Catholic Church? And so we have enormous exposure to basis risk in the energy markets because all of our rental agreements are utilities included. So if you had a sweltering hot, hazy hot and humid Indian summer even kind of a deal, people would be jacking up the air conditioning and not worry about who's paying the bills because it's utilities included, right? And same thing in the winter. If you had really cold winter, especially one that kind of crossed over the Widowmaker, March, April, again, people would be jamming on the heat, and there's your heat and oil exposure. So I had to help them create on Lotus 123 a seasonal model for energies for fuel oil, heating oil, and natural gas on when seasonally they might want to hedge. Where was their risk, and that kind of stuff. Outlying events notwithstanding. And then I realized if it's a zero-sum game, I could take those same models and use them to make money. Obviously, I have to get the position sizing down because as a speculator, you don't need any of the size, right, of any particular size. So hedging's a lot easier because you know what your exposure is. But speculating, you have to figure out what's the optimum size for your temperament, not just for your model. There's an intellectual answer for your model. Then there's the emotional answer that you can withstand and not want to do an Acapulco cliff dive off the top of the roof of your building. So, which is only a one-time event, depending on how big the building you live on is. And so that's the crux of it.
And so you started building models then. So that's kind of still a big leap from building models to, like you said, learning your temperament and, handling the losses. And this is probably, like you said, this is probably in the mid 80s. Is that right? Around the right time frame? Okay.
Yeah.
So how did you start, did you open up an account with a futures brokerage at that point, or how did you, actually cut your teeth and put that first trade on?
Right. So, I had an account with a firm that was concurrently registered as a broker-dealer and FCM. And so all I needed to do was the paperwork to qualify for having futures margin account.
Okay.
I didn't do a lot of futures until I actually got to Wall Street, where I knew I could, do it myself more than trust someone else. I didn't really want people telling me that, hey, we got to buy the Deutschmark here or blah, 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 because it was trading still at the time. Or I didn't want to hear anyone else's nonsense because I had a strong inner game from a young age. It was very, very self-aware. And I just didn't have any need for a salesperson to kind of help market stuff. Even if they thought they could make me money, my level of trust for people like that starts out low and it usually gets lower.
Nice. And so, do you remember that first trade you put on? Was it a winner or a loser? Or do you remember that?
I honestly don't remember.
Okay.
I tried to write about the whoops, not the whoops, but I tried to write about the ones that I did remember where at any given moment of my career where I really had done a lot of work and research and study and reached out to certain people, you still get hit and you still get blindsided. So those are the ones that I remember most in terms of what it probably was a grains trade, but I don't remember. I know I was trading softs and grains quite a bit.
Okay.
I tried to stay away from things that I would see in the headlines. Back then there was no internet, so I didn't want to wake up and read the C-section of the Wall Street Journal or even Barron's the following Saturday and see something like the whole world is short corn after I just put on a monster position or an old crop, new crop spread. So I tried to stay off the beaten path. It's something I still try to do these days.
Interesting. So my understanding of the way you trade is that you're certainly trying to build a sizable position, or I guess maybe positions trading is probably the best way to characterize it. Is that right? So you're holding for longer periods of time and looking for the larger moves around commodities and perhaps using spreads?
I'd say that's fair.
Okay.
I'd say that's a fair assessment.
Yeah.
I think after seeing a lot of different types of trading, I really don't have any one style, which probably, sounds blasphemous to many people, where you have to have a system and you have to do things, whatever. Like, I would probably say that you could say I'm a discretionary trader, but everything is still systematized. Like, I don't just trade futures outrights or futures spreads or just derivatives and options, or, even I have my portfolio is like a drain catch soup of stuff. But it's all systematized risk. I know where the risk is. I know what my entries are. I know what the long-term goals of my trading and investing are supposed to be.
Right.
I just think one style doesn't feed me emotionally. And two, if you just trade one style, like especially trend followers are taking it in the back pocket right now, right? I mean, There's the worst commodity markets in the history of mankind. And I mean, some big places, not to mention any names, Chesapeake, are down to like one account and 12 million in assets or something like that. So, it says something not just about the methodology, but just where we are in the times of, people making allocations. Is it the model, or is it people just going to the ETN, ETF space, or is it people just losing faith in the manager and the process? These are tough questions to ask. And you have to be able to afford drawdowns and people withdrawing money. So, if Jerry Parker and Chesapeake or Keith Campbell and Dunn and, John Henry's out of the business, that says something. It says quite a bit about that space. Yeah.
And so I know I've heard you speak about this in previous interviews in your own show, is you use this idea of, I think you said you kind of have a team of three: time, money, and capital. You like those working in your team when it comes to trading. Can you elaborate on what you mean by that?
I'm just writing it all down now. You said time, money, and capital. Right. I don't know how do you define money other than capital?
Oh, I guess I think you said time. I guess I missed one there. So time.
No, leverage.
Leverage. Sorry.
Leverage. Yeah. Okay. So I'm going to cross out capital. since
Time,
we're
money,
doing
leverage.
this is a color by numbers, follow at home model. So I have time, money, and leverage. And yeah, that's absolutely correct. So remember when I said that I wanted to work hard, but I also wanted to work smartly and this is what short-term traders and day traders typically come to find out the hard way before they make the conversion to trading more smartly and expanding their time horizons. And that is, I can work for my money and I can have my money work for my money, right? And so if you buy real estate, you have really great tax treatment. You can buy a piece of property, put in a tenant, have the person hopefully cover the PITI. And as long as you're cash flow, neutral to hopefully positive, you'll get the growth. You get the cash flow, you get the depreciation, and if with rates being practically at zero, you can also try to increase or better your financial situation in terms of the note, right, the mortgage.
Yeah.
In the commodity and the derivative space, and commodities are not derivatives, right? So we're talking about options like puts and calls and stuff. So I want to make sure that I have time on my side, just for the very fact that, I was talking with Steve Sears of Barron's the other day and in an interview that's yet to be published. And we were talking about the effect of ESPN on Disney's parent company and how they receive approximately $6 for every set-top box or subscriber that comes through a traditional cable channel or DirecTV kind of a deal. And we talked about what they would need to replace. And I told them that I had been long the 70 calls, the long dated leaps. Then I rolled to the 90s. Then I rolled to the 110s. And then lo and behold, I think it was yesterday, they said ESPN, is laying off 350 people, which, that's a sad day for 350 people, but it's typically a good thing in terms of cost cutting for shareholders. So I don't know if, when, and how those things are going to happen, but I know I have to be there, and I don't want to have to sit at my desk at 5 a.m. California time to figure that out, because that's what our desk is trading. Like, I just think that that's nonsense. If you have to reinvent the wheel every day, you're involved in a process that's not built for long-term success. I don't care how hard you're working. You can work hard, but that's great. But, the minimum wage in Seattle is $15. And so if you can make that much money working at a place up in Seattle, you'll probably have a higher quality of life, because you won't have the stress, and that it's your income therefore is a function of time. But setting goals like for $200 a day trading or whatever, that means you're trading, your account is too small, and you should probably take time off to build a bigger grub stake. Yeah, and if you're worried about slippage and skid on your stop orders and getting nailed for half a tick because you're trying to fight the high frequency traders, you're trading too small or you're too anal. So stop trading and build a bigger grub stake, because if you're worried about getting scalped for $6 on the E-mini, you got bigger issues.
Yeah, you got bigger fish to fry than that, right? And so, what about the leverage part? Where that's the time? How does that fit into things?
Yeah, so leverage just means that we're afforded implied leverage with commodity futures. So you're putting down, say, worst case, based on the span calculators that they use at the exchanges, anywhere between 3 and 10%. With the option premia on certain things like Disney or otherwise, you're putting down a small amount of your capital to control a bigger amount of the notional. And you have a built-in stop order, with the options, right? If you have a $2 premium, I like knowing what my max loss is ahead of time is. I also, and I was mentioning this to somebody else, like, Disney's $110 a stock, right? So say you go out and you buy an $8 call. Now, I like what Bob Iger's doing at Disney, and I like where Disney's going, period, right? That's why I'm an investor in Disney. Disclosure. But say something happens that I can't fathom because it's happened before, and all of those things that happened before were delineated in the book of how, bad things happen to good people with the best intentions. So suppose Disney got cut in half, or even got cut down to 90. I don't want to be sitting in something waiting for a $33 or a $20 return just to get back to break even, right? Because I think in terms of finance and financial planning. So all of this trading and investing has to, kind of come together in a cul-de-sac called your financial plan. which is part of your estate plan. And I don't want to be sitting in a dirty diaper of a stock, even if it's a blue chip number, waiting for something to come back, because that's not good finance. That's probably smart investing, but I need my securities working for me all the time. So by using an option, I am forced to let the thing expire, or on the other side, let time work for me and let the leverage work for me, because I don't have to tie up, whatever it is, $11,000 for every round lot of the stock that I want. I have to obviously forsake the dividend, but I don't really care about that at this point also, because it's the tax treatment on dividends is, bad.
Yeah, right.
So it
makes sense.
It doesn't matter to me.
So the idea then is, to summarize, so you're using the options, so you have that built-in time stop. You're going to have to get out at some point. It's going to expire. That's going to get you out of the position. How do you decide when to take profits then? So let's say, you're rolling over those leaps. What point is the premise get invalidated? Is it based on price action? Is it a combination of price action and fundamentals? What gets you out of that trade?
Yeah, I would say, keeping the story going with Disney, the fundamentals are still there, even if the stock, zigs and zags. And with options, right, you're doing that delicate balance of the art and science of trading, in that you have to have a good, it's a poker skill, right? You have to say, okay, well, this thing's gone parabolic. Now's a good time to cash out of my debit, offset, have an opening purchase, have a closing sale.
Yeah.
And then wait to re-enter, buy something long dated at the money. That's typically how I would do it. I don't just roll contracts like I would, or I used to anyway, in the futures markets, where you're offsetting one contract and simultaneously reestablishing the position. That's more of a CTA kind of model to keep the exposure. For my style of trading, it's kind of hit or miss whether or not that actually works. So I typically would do it more a la Amos Hofstadter Sr., which of course is reflected in the trading of my buddies and, well, my mentors who are now good friends in Mike Marcus and Ed Seykota. I want time working for me because in that kind of space, time heals all wounds. Even if there is some bad news, or if there's like that flash crash, thing, the market was down 1,000 points or whatever, like, cooler heads prevail. And if you're in the derivative, you don't have to worry about getting smacked, because the option premium, it is what it is. You can take it home at night, you can take it home over the weekend and not worry about getting blasted.
Right.
The idea about day trading, I think, it's very myopic in that you have to you have a winning position, which you're lucky to have in the first place, and you have to close it by the end of the day. That's retarded. You're lucky to be in it in the first place. Why deliberately offset it? I mean, it makes no sense. And if you're working for a firm that mandates, you got to find a new firm. I mean, because their risk management is not your system.
Right.
So I wouldn't let them impose that upon me.
Yeah.
I would tell them to go forth and procreate and find another outfit.
Yeah. And so just back to that Disney trade then. So you would get out of that trade if the price goes parabolic, and if the story changes.
Yeah, I mean, and the story, what's going to change now? The thing that you're playing with Disney is that they're probably going to stream ESPN. It's just my guess, as a standalone sooner or later.
Everyone's going to want to pay for that.
Yeah, even people who have it through their regular cable, if they can stream it on their tablet or their smartphone and get the full access to all the 7 channels that they have or whatever, because it's not just ESPN anymore, right? There's a million different versions of it.
Yeah.
People love their sports, right? And so they will, they'll likely pay for that added feature of having it mobile. Maybe there'll be special behind the scenes stuff, but Disney's very smart. I would trust that I don't know the right answer, but that they do, since it's their asset.
Yeah.
They could package it and bundle it with other stuff. They can start doing joint ventures at live events. Who knows? They could tie it into Parakeet, whatever it's called, Meerkat, or Vine, or other type of user-submitted stuff that boosts the brand and sells the app. You just never know. Like, they could sell it as an app and then have a premium feature where you can opt out of ads. I don't know. I'm just being creative, but
Yeah.
I trust that they know what they're doing because it's a very successful medium for receiving sports entertainment. And then you've got Star Wars, right? I mean, they're pre-selling tickets already for a movie that's not coming out for 2 months.
Right.
And there's an enormous buzz. You can't, browse your Twitter feed or your RSS feeds and without seeing speculation. Is Luke Skywalker the bad guy in this movie, right? So they're getting all this buzz.
Yeah.
We don't even know what characters are going to be there, so there'll be merchandising just in time for Christmas. Funny thing. And then you've got 2 more. You got episode 7, and then you have 8 and 9. Plus, you might have a spin-off on Han Solo. So, most analysts don't get paid to think creatively or to take chances or to kind of guess, right? But that to me is a good guess. If you're going to guess that they're going to get it right, and that the numbers will probably be better than expected, because analysts don't get paid to go too far afoul of what they were taught on the CFA.
Yeah.
Even the highest consensus estimates are still kind of conservative when you look at the rules that they use or the guidelines they use to publish their research. So, again, I think you're asking, when do I roll? I don't have a hard set rule. That's a discretionary, aspect. I have to look at the market and say, okay, you got to get out when the getting's good. Now, my preference would be to stay long that long-dated call for as long as possible, but there is that biological conclusion, right? It will expire. So I have to roll it at a time when I think, usually on a big up day, like if there's news that hits the tape and there's a big up day and I think the getting's good, might be a good day to sell the call, because that's how you have to trade the vol, right? You have to trade the vol part of it, never mind the intrinsic value.
Right.
So that to me is getting the best of both worlds as it's expressed in the premium. And then you wait for things to kind of calm down, let the things settle in, find a new range, and then buy, something again long dated, probably at the money, for as far out as you can find. So
that makes sense. And how do you use the same kind of approach around commodities? Can you still build these types of same narratives and stories when you put on these trades and find these kind of bigger, stories and pictures that you can trade around? Is that what you do? I don't want to presume that that's what you do, but is that how you do the same? Do you do the same with commodities when you put on trades around commodities?
Oh, yeah.
Okay.
Yeah. I mean, I know it's popular to say, like, you don't need to know the fundamentals, but if you take anybody who was like a global macro investor like Soros or Jim Rogers or Caxton and Bruce Kovner, and any of those people, like, they all have a strong sense of the fundamental story, right? And they're looking for the technicals to kind of line up to kind of validate.
Yeah.
In the account of Jim Rogers, he's probably more a fundamental trader, and he buys things oftentimes in the cash market, and he buys, it'd be the equivalent of having like $1,000 in cash on your desk, and he gets like a 1 penny exposure. So when he's wrong, he's early, but he's wrong in such a small way. He's really putting that piece on for the data that he can garner from having the position on to see how the market's behaving, right? Because people trade like they, like they play poker. So you want to see the information that you can get with both price action and volume. But yeah, the goal in that case with futures is to build a strong story and research the daylights out of it, and then when the technicals line up, you know that the wind is at your back, and so you're hoping that you see the follow through. Because then you can have a position on, like, one of the lessons that I have in the course with Peter Borish is a particular sugar trade that I had on for about 7 months. We're back in the mid 2000s. We caught sugar from about 8 or 9 all the way up to, I think it was 18. It went to 19 and a quarter basis the March of 06 contract, but I think we got stopped at 18 even after being in and out, in and out, in and out. We had like a 300% rate of return just based on that sugar trade alone. But that is not happening every year. You can't will that into happening. You still have to follow the parameters of what is smart finance, and we were continually adding to winners. Many times, not just 2, 3, or 4, directional units. As it was going up and it made sense, we kept adding. And all the while we were managing risk. I was managing the risk. My rule on risk management is not, I can scale into positions, but when the party's over, everybody has to go at the same time. I don't need
You don't want to layer out of that.
There's no sense in layering out. And it's like, think about you going to a party. When the party's over, I don't want the kids hanging out because there's separation anxiety. It's like every play date has a beginning, a middle, and an end. Now the party's over. Now get the hell out of my house. And so, if you don't want to own, say you got 100 contracts of sugar, and the move is over, why do you want to hold on to 5? Just for posterity's sake. Like if the move is over and the technicals aren't there, even if the fundamental story has become a little bit blurry, to me, it's far better to just get out of the whole thing and then, kind of come back with a clear head and say, okay, after a few days.
Right.
And to be honest, when we did look at the thing afterwards and tried to say that or thought that we knew something, we invariably lost on like the next 4 trades. But we were trading tiny positions. But it was the thing had gone parabolic, and afterwards it was just a bunch of directionless markets. There's a ton of volatility, but no direction, which for any trader is a mess.
Yeah. I like that idea. So instead of trying to hold on to the last few lots and just trying to bask in the afterglow, just get out of the whole position. Yeah.
Yeah, and that's what we did every time. We'd add. So for the folks listening at home, if you add 10, then you add 7, then you add 3, and you have 20 contracts, your stop to get out is for 20.
Yeah.
If you're long. So your sell stop is somewhere underneath the market for all 20. That's
great. And, so maybe we can just change gears for a second because we're getting a bit deep, kind of deep into baseball. But maybe you can share with the audience. So, in your book, you have a great foreword by Ed Seykota, and you mentioned that he's one of your mentors and friends now. How did that relationship come about? So how did you find mentors like that, and did you purposely set out to find mentoring, or what was your path towards beginning to build these great relationships with such great traders?
So with Ed, I just cold called him basically. I was already in LA. I was already registered as a CTA. I think I had $8 million in assets at the time. So I already had my company. I was already doing it, was already making money.
Yeah.
And, going back, whatever it was, 15 years, I remember saying, like, I wanted to work hard. I wanted to work smart, but I was a one-person operation. And so I thought it might make sense to have somebody that I could be accountable to. And the question is, when you're doing that, who are you going to be accountable to? Your parents, who are like, yeah, this is legalized gambling, or you ought to become a partner at a law firm.
Right.
And I'm like, my parents didn't say either one of those, but that's kind of typically what you hear.
Was implied.
When you're trying to do something unconventional. My parents just said, go do what you want to do, be happy.
Nice.
So I remember emailing him first, and I guess my email resonated with him because he didn't even answer the email. He just sent his phone number.
Oh.
And I remember sitting back at the time, truth be told, saying, well, that's just great. I want the answer. And all he did is send me his friggin' phone number. What the hell am I going to do with that? So it kind of occurred to me, because I'm really bright, about 2 weeks later that he probably wanted me to call him. And so that's what I did. And I do recall we hit it off right away, soulmates kind of deal. And I do remember our first chat was for about an hour and a half. And he invited me up to his house and and I flew up there. And then we talked about his putting that iteration of the Incline Village Trading Tribe together. And I told him I was interested. He said, you'd probably come once or twice and get tired. And I was like, I'm going to keep coming. You can edit that out. And after 2 years, I only missed one meeting every other We met every other Thursday for 2 years straight, and the only times we had meetings that we'd cancel because of the holidays or whatever, but I only had one excused absence because I was chairing a golf tournament down here that raises a bunch of money. So I proved him wrong. And we got a lot out of it. That was a fun time.
So tell us more. So what are some of those things that you got out of it?
Well, for one, the easy thing to miss was the commitment, right? Because Incline Village is in the North Shore, Lake Tahoe in the state of Nevada. I live in sunny Los Angeles in Bel Air. So I got to get on a plane.
It's a bit of a trek, yeah.
It's not like, people say, well, Mike, I don't want to take your courses. They're too expensive, And I'm like, that's fine. The Rolls Royce, it's not for everybody. But, there's a reason why you don't see it on sale for $80,000. It's because it's not for you.
Right.
And that's just because, it's me and a bunch of really legendary kind of guys. And so it's not open to the public per se. Yeah. It's not meant to be. So there was all that planning involved of trying to run the business, trying to be a trader, taking it on the road, getting, airfare and accommodations every other week. It was a material financial outlay. Yeah. The being in the tribe was free, but I had to get there. And admittedly, I was not the only person who had to get on a plane to make those meetings. It was that kind of group of people. They were a really great group of guys.
Very committed, sounds like.
Yeah, so basically what you do is, that's the tribe is where you start to learn more about if you're not in tune. Like I had been doing yoga and meditation forever. So I had a really strong inner game. And so for me, the trading tribe was it was very easy to assimilate into the tribe life, or that process, if you will, because I knew what the goal was. I knew what they were trying to get at. There were a few people who were not in tune with, mindfulness or who they were or their emotional systems that they were running that we all run.
Yeah.
We all have emotional systems, right? Our goal is to be pleasure seekers. So somewhere in everything that you do, you can trace it to some form of pleasure that you get.
Right.
And so this was very fun to be involved with because you could learn a lot from other people demonstrating and wrestling with their emotions to try to figure out, what the drive was.
And so what was the purpose of the tribe then? So was it really about, cultivating this level of self-awareness, and kind of having that kind of camaraderie and collaboration to go deeper? Was that the gist of it? Or was there more to... Was there brass tack stuff too around trading, or was it more, like you said, more around self-discovery?
Yeah, it was more about self-discovery, but all the other things were peripheral. Like there was a great sense of fraternité. It was, largely male. I mean, we might have had one or two women pass through, but the core group was male. And it was about emotional intelligence. We didn't really talk about trading at all. And very difficult to, I was proofreading Ed's book called The Trading Tribe, which he wrote. And I would say to him, I love that you're writing a book. The community's going to love it. The FAQ readers and the Ed Seykota groupies are going to eat this up. You probably sell a lot of books. But to be frank, it's very, very difficult to write linearly about the trading tribe process. And I used one of Ed's analogies back to him, and I said, trading tribe is like sex in a lot of ways. You can write about sex and you can have sex. And for those of you who have had sex, you know what I'm talking about. There's you can read the joy of sex and then you can do it. And the trading tribe is the same kind of a thing, just like trading. You can talk intellectually about trading and then you could do it. And that's when the fun starts, because all your associations with money and financial literacy come forth. So it was about emotional discovery and finding things that would, come up for you emotionally while you were trading or while you were in, relationships, for example, and where you might have had blocks. And we encouraged you to feel those feelings so that you could figure out what those feelings were trying to teach you.
Because ultimately that would then reflect back into your trading at some point if you had that unconscious or didn't accept those feelings.
Well, it comes back to your life, right? I mean, your
Yeah.
trading is part of your life, and you find that the way you handle money is probably a reflection of your best relationship with a person or your worst relationship with a person.
That's
It's,
beautiful. Yeah.
and I'm not talking romantic. I'm talking platonic friends. It could be a family member. However you have it tied up,
Yeah.
you find that, money is just another inanimate thing, but it is something that because of the social mores and all the things that you can do with money. And I think this is one of the problems about day trading is that you start to see it. The money that you make and lose is a car payment. You start seeing it as your rent or your
Right.
Netflix tuition or, whatever it is. And you really can't look at your trading capital. It's such a small-minded way of looking at things. So, um, that was ultimately it did come back to one's trading, but you find that your trading is really a microcosm of your overall emotional intelligence and that. So,
That's beautiful. And I guess that layers back, this goes back to, I guess one of the quotes you put in your book is, you say, the key to winning in the markets is internal, not external. And you just kind of talked about why that is. Essentially, how you do anything is how you do everything. So the way you live your life is the way you're going to act in your trading. That really, really stands out to me.
yeah, I mean, I guess the thesis is that, and this comes up about, all the time, that there are no external solutions for your internal issues. So you don't need a 50th monitor. You don't need a machine with better clock speed and refresh rate. You really don't need real-time quotes. You find that most of the stuff that you think you need outside of your person is necessary for you to succeed when in fact it's really just the opposite. And actually buying a solution, it seems like a quick fix, right? Because it's like, well, I'm willing to make this investment, right? Who could frown on that? But it rarely works. The best thing to do is to sit quiet, go inward and see, really journal and monitor what your behavior is around making some of these decisions so that you can kind of get to see on paper what your emotional system looks like. Because everybody from, Jerry Parker to Bill Dunn, they all have very strong emotional systems, And I've been in the room with Bill Dunn. I've interviewed Bill Dunn. He's a powerful guy, and I say that in a as a fan. I like the guy. I consider him a friend. But he's very, he's got very strong opinions about things. And even in the interview that I did with him on video, he talks about putting on trades and having self-doubt. What Bill was really good at was just not overriding his system, and keeping it that way.
And so how do you begin to build that emotional fortitude? Have you come across a process where people can find a way to immerse themselves in their emotions? It seems like a lot of people are afraid to open up to that vulnerability. They'd rather just have it be a game of, like you said, kind of paint by the numbers, versus this kind of more non-linear aspect of what we're talking about here.
Or so they think. But the truth is that whether you're conscious of it or not, you're still running your emotional system.
Right.
So you might as well become friends with it because it still dominates everything that you do, right? We're emotional beings.
Right.
The fact that you think you can trade some kind of ridiculous 20-day breakout system is irrelevant because that's not, that's just a parameter. It doesn't say anything about the quality of the 20-day breakout, right? There's a million, when you look at 20-day highs, there's a quality to the 20-day high, right? It's not just, consolidated breakout 20-day high. There could be a parabolic 20-day high. And those are two very, very different numbers, although the parameter is the same.
Yeah.
So how do you reconcile that emotionally? Because, I was talking with a kid the other day who wrote in, and he said, I have a system. It back tested positive. I'm still making money, but I'm not making as much as I could because I'm not putting the orders in as I get them. And I'm like, so you're negotiating with your system as if you can bring something extra to the table here. And I said, do you do that with other people? And that's when he hung up. And then he called me back and said, oh my God, that's what I do. I always have to ask extra questions. And I said, so you're a pain in the ass to deal with at the kitchen table. He said, yeah. And so, you can say that emotions aren't a part of it, but they absolutely are. As long as you're a human being, emotions are front and center.
Right. And I've heard you talk about this idea of emotional hazing. Is there any way to shortcut that?
No.
There's no way to shortcut that.
No.
Short
No.
answer, no.
No way to do it. No way to prepare you for managing real risk versus the,
Yeah.
the simulation model. Everything looks good. I was talking with a buddy of mine who's a big allocator, and I caught up with him at the Milken Institute's global conference, and we were chatting and we were having a laugh. And we were talking about, the emerging CTA space and, receiving marketing material and otherwise. And we both looked at each other and laughed, and that, we've never seen a back test that we didn't like. Because the marketers aren't going to send you something that runs into Monte Carlo ruin no matter how many iterations you run, right? They're only going to send you something that would entice you to allocate money.
Right.
But, trading those models and designing them, again, are two very, very different things. You're very safe when you're sitting with your simulator. You're very safe when you're going through your value at risk calculations with your Excel add-ons. You're very safe doing that. But the minute you have to put on a trade, that's when the fun happens.
Right. Have you ever met anyone who didn't have some sort of emotional struggles? Or is there anyone, is there such a thing as a person who's kind of raised perfectly, who had a perfectly loving family, didn't have any, had the perfect emotional upbringing, and brings no baggage to the game? Have you ever seen that before?
No.
No, huh? Yeah.
I mean, because I have a lot of that. I have a perfectly loving family, and my mother's in heaven now. But at the end of the day, I had the best of all worlds. I had the freedom, I had the education, I had the mentors. But you still lose money. It still sucks.
Still trigger something.
Yeah, and you still have to get on the phone with your clients and explain to them, even though you say, "Please don't call me." And you have to deal with all that. You have to deal with people who, you tell them in your disclosure document, you've pretty much given them every reason to talk them out of giving you money, yet they still do it.
Right.
And then when you're in a drawdown, they still want to know why. And, it's really, that becomes impossible. So then you're sitting there saying, I'm at the 0 point with my emotional constitution. I know my returns are in model, but I still have this jackass calling me about the gold market. And I don't want to talk to anybody about the gold market. We're not buddies. You're an investor. I have third-party trading authorization, and that's it. Like, I don't want to talk to you anymore about and Ed had a great thing. I'm not telling tales out of school. Ed has this thing, or he used to anyway, in his client agreement. It was called the 3-call rule. And if you called him if he managed money for you, which again I don't even know because I don't really talk to him about that stuff. It used to be anyway that if you call him 3 times, he gives you your money back.
I like that.
And it was just handwritten on the backside of a piece of paper. I agree to follow my system. You agree to not call. If you call me 3 times, I'll give you your money.
Your money's coming back.
Yeah,
to you.
it was awesome. I mean, only he could do that, right? I mean, I can't, probably myself could not do that. But.
That's a great story. So tell us more. Just in the time that we have left. So it sounds like you discovered yoga and meditation early on, which right now is obviously the hottest thing in the world for traders to be doing is meditation and yoga. How come you found it so early in your adult life? How did you fall on it, or how did you discover it?
So I had read autobiography as a yogi just because I'm a very avid reader, and that got me interested in it. I also was in New York City, where you're in the urban environment, and a lot of yoga schools. And I had some family members who did yoga. And at first I was like, nah, this isn't for me.
And what age was this? Can I ask?
Oh my gosh, this is probably 20 years ago.
Okay.
And I just tried it, and I immediately liked it because I realized that yoga is not about you getting into this level 5 kind of position where you look like a contortionist. If you need to go there, then great. But yoga itself in the vinyasa, right, which is when you string all the poses together, it's a choreography, right? So they call that a vinyasa. The point of it for me was to practice the poses enough so that I had technical proficiency so that when I did them, I could lose myself in the vinyasa, thus making yoga a moving meditation.
Yeah.
So I was like, this is awesome. I hate the phone anyway. Don't call me. I'm driving in LA traffic, which makes you want to go postal. And now I can tune out and go inward because I'm introverted. Probably doesn't come as a big surprise. I can go inward for 90 minutes and then feel like $1,000,000, not only after the class, but you get this emotional hangover for the next day where you just feel like, wow, I am really grounded. I feel like $1,000,000. Like I can get addicted to how this feels, and there's no pills to take, there's no drugs, there's no whatever. The worst part about it is probably the driving, and then two, maybe the street traffic where you hear the horns and the other, otherwise. But it's it's probably the smartest thing you can do is just stop, turn things off. You don't need Twitter.
And is that still a practice you follow nowadays?
Oh yeah.
Yoga and the meditation? Nice.
Oh yeah. Oh yeah.
Can you share with us? How often do you either do yoga or meditation in a week?
I mean, I do yoga every day. I do meditation several times a day.
And is it like a 90-minute yoga practice with meditation throughout the day, like maybe in the morning, in the evening? Can you share that?
Yeah, well, here's the thing about yoga is that, you tend to be more clear in the mind in the morning, but your body's less flexible because it's not warmed up. And that flips over towards the end of the day. So if you practice at night, you might be more limber, but your mind is going in 45 different directions. Now, I've been able to turn that down a bit because, meditation, although the mind is a beast, even for me, I can still kind of turn things off and go inward, much more quickly than I could when I was, of a bigger monkey mind than I am now. So a lot of it comes down to my schedule and how I have things. Like today, I didn't want to be running late for you, and so I decided to do the yoga stuff on the latter part of the day than the front end. I probably could have gotten away with it, but I just don't like having that in the back of my mind. It would have been a distraction. So I kind of do it as it makes me feel good, right? So I do it in my calendar and in my schedule so that it makes me feel good.
That's a great routine. And so can I ask, what do you think that meditation brings to you, and the practice of yoga? What does it bring up for you? How does it benefit you?
Well, it allows you to just be you in your own energy, right? I mean, there's no, or there shouldn't be any hang-ups, any otherwise, any duresses. If you just go and let yourself go, you also find, and this was kind of concurrent with the trading tribe, or congruent, I guess, with the trading tribe, that you can find that some of your mental hang-ups can be found in knots in your body, like backaches or hip tightness or otherwise.
Right.
And, I'm not a doctor, I'm not a physiologist or whatever, but I do know that when people get all cranked up in their bodies physically, a lot of times it's because there's an emotional thing that goes with it, either conscious or unconscious. So you can unwind a lot of that if you just get into the practice of yoga. And it's not uncommon to see people or hear people become weepy in the class because they're surrendering and they're letting all of that stuff go. And so...
that's beautiful. And I've heard you talk about that idea before, the power of surrendering and just giving up to certain things. So
Chapter 2. Yeah, and that's tough for alpha types, right? Macho alpha types, because they're all like, yeah, man, the market's bid-ask, this, that. And there's all this macho talk around trading, which you find out later in life after you've lost a sufficient amount of money, that the language or the vernacular does not help you make money or even understanding it, because at the end of the day, it comes down to you and your relationship with money. And relationships mean emotion. So you got to figure out, why would Ed Seykota, who is certainly one of the forefathers of technical analysis and system trading and trend following, why would he have a men's group that deals with emotions? You know what I'm saying? Like, if you're following the marketing schlock, then you deserve what you get.
Right.
But I mean, if you want to trade like a pro, you have to embrace your feelings, right? You have to embrace your emotions, and you certainly need to know who you are emotionally. When you go in to see an allocator, they are sizing you up as a human being. Not sizing you up because you're a stupid model. I mean, that part kind of easy at the end of the day. I mean, I might be simplifying a little bit, but ultimately, allocators are going to be sizing you up as a human being, like, because they're making an investment in the business, in your business, and you are a big part of your business, right?
That's a great insight. And so, you see this a lot. Like, people use the analogies online about fighting the markets and being like a boxer, or, being like a warrior and trying to take the market down. I guess this kind of goes against, what you just talked about, right? Is that relationship of trying to overwhelm it, or trying to be, that warrior may not be the healthiest relationship with the market.
Not at all. I mean, you can be like a warrior with yourself and hold yourself to a certain standard, but you have to basically say that the market is a gigantic ocean, and you're just looking for waves to surf on some level. Hopefully, you'll get the longer ride possible. You don't want to be body surfing near the shore, because it's very volatile. You're going to get banged up. You're going to get scratched elbows and knees, and the rides are very short. You want to kind of catch the wave way out there and hang 10 for as long as you can. Have a nice ride, jump off the board at the last minute, and try to do it again.
Yeah, that's a beautiful analogy. It's so much more energetic in a way. Like, just feels better.
Well, why would you want to turn trading into blue collar despair, right? Like, one of my favorite authors is Raymond Carver, who wrote short stories. He's since deceased. I think he passed away in 1988. But he wrote short stories about blue collar despair. So I always look at the trading macho guys are sitting at desks, right? Which is clubby, and it's like, dude, we're at the trading desk. And it doesn't mean shit in terms of making money. Like, yeah, you can trade ideas, but ultimately I don't, and I'm not saying this to sound like I don't care for you or about you as a person. But when I trade, it's about me and what I know about myself and the markets and the instruments that I'm trying to trade. I can't allow anything from you to, osmotically enter my process.
Right.
I wish you the best, but what I do is based on what I do, and I can't, take your parameters or insight or otherwise as something that I could find valuable, especially in the middle of the trading day when the war is on, right? It's the fog of war. So you can absolutely set warrior standards for yourself. But I think if you try to fight a war with any instrument, any market sector, or any market around the world, sooner or later you're going to find out the hard way that you were never really in the fight. Because the market doesn't care if you're long or short anything. It doesn't care at all. You're just a participant. And those markets don't even exist for you. Like, when you look at the secondary market, in all types of trading, right? Look at the capital markets, right? Stocks and bonds. Those markets don't exist for you. The secondary market trading is incidental. Those markets exist so that issuers can raise capital. So the secondary market trading kind of comes as a nice aftermarket thing. And same thing with commodities. The two market functions there are price discovery and risk transference. So again, the fact that you can trade, you're just a player. I don't want to say a pawn, but you're definitely not a general, and you probably won't be. You won't be a ninja. You're not going to be a general. You're not going to be a Navy SEAL sniper. That's all marketing bullshit, right? You want to think about like going inward and being the yoga boy who's going to stand on your head for 7 hours, and you'll get up only when it makes sense to make a trade. Based on rules that you've tested, risk parameters that you can test, far beyond the concept of N, or normalizing risk across commodity instruments. I mean, that's all very back of the napkin, pardon me for saying it, lowbrow stuff that even my dead grandmother knows, right? I mean, you need to go beyond. Like, there's so much more to it. And at any given moment of your trading system, your emotions are right there, like water looking to seep into, the paper towel. Like, you can't escape your emotions. They're at every part of your system. And if you've designed a system, well, then your emotions are embedded in the system. So then you have to think about your trading as not just about the financial payoff, but it's the emotional payoff. And that's where the trading tribe really helped people figure out, like, are they trading for profits, or are they trading for drama, or a combination of the both? And of course, the possibilities are relatively limitless.
Yeah, that's beautiful. Yeah, so many insights and layers there. So really appreciate you sharing that, Michael. So I know we're running a bit long on time, so maybe I can just shoot a couple quick questions for you, and then we can wrap things up. First off, I know you're a big reader. You also have I know you said you've edited a number of books. So, do you have any top recommended books, not just around trading, but any books that that you really find yourself maybe gifting a lot, or you just love to revisit or share with people? Doesn't have to be trading.
Yeah. Yeah, you're right. I mean, I like to read just because it helps me get perspective on how other people see the world or see themselves, and I just find that helps my inner game, my sense of self-awareness. I think as far as trading is concerned, information is ubiquitous. It's cheap. You can get everything free on the internet. So, what we try to do as far as teaching is provide insight and wisdom. Yeah. So I don't really even have any favorite trading books anymore because the information is free and most of the books lack insight and wisdom. So I think in terms of getting personal wisdom, a great book by, it's called The Diamond Cutter by Lana Christie McNally and Geisha Michael Roach. Probably one of the best books you can read, Diamond Cutter. That coincidentally was recommended to me by a family member who is now a yoga teacher. I think I quoted it in my book as well. And then I find myself reading things about very, very interesting people just because I like to learn about people and how they got to be where they were. So, I mean, I've read books about, publishing and music people and about boxers and entertainers. I read Ronda Rousey's book recently, which was great. It's called My Fight, Your Fight. Yeah. I also read Tyson's book called The Undisputed Truth, which is, I know a few of the guys in the book. And that was Tyson's a very self-aware guy for all the stuff that you might know him for in terms of going nuts and all that and biting the ear. He's a very wise person. He's very self-aware. Yeah. Shocking. Same with Ronda Rousey. She was very aware of all the things that she was doing and all the trade-offs that she had to make. And then, there's just some guys and gals who are I think a real cast of characters that have led very, very colorful lives. So they're in and around music. Like if you grew up and you listened to Kiss, Paul Stanley from Kiss wrote a great book called Face the Music. Clive Davis, right, wrote a great book called Soundtrack of My Life, and then the late, great Jerry Weintraub, who just died within the past few months, wrote a book called, When I Stop Talking.
I really like that book, too, yeah.
You'll Know I'm Dead. So I find those books interesting because those people have led very rich lives. They had to be very entrepreneurial. Everything that those folks did, they kind of created, right? There were no role models for them, basically.
Yeah.
Tyson's book was good because he had obviously a very close relationship with his coach and mentor in Constantino Customato, and it was very interesting to read that relationship and see how they interacted with one another. But I think that would be it in terms of the books that I most recently. I don't really have anything on the to-do list. That's
a great set of books, though.
Yeah, and those are all obviously nonfiction, right? So there's fiction that I've read, but I don't know that anyone cares about that stuff.
Well, if you want to share some in my way, I'll definitely write them down and share with the audience.
All right.
So maybe I'll ask you one final question then. So we've spoken a lot about the inner game. So if you have let's say if you talk to a trader who's already doing pretty well for himself, he's been consistent for a number of years. And he wants to get to that next level, whatever that next level is. Where do you think that person needs to spend time? How do they go from good to great?
So again, I would go inward if it was me. The first thing I would do is go inward and say, okay, what is the characteristic of my wanting to go from good to great? How do I know that I'm not already great? And what kind of parameter am I using to measure my own performance to know that I'm not working at full capacity? Because some of that could be a mind, what's the word I'm looking for? It begins with an F. It's a mind. Yeah, something like that. Yeah, exactly. Good use of the word. Yes, exactly. It's the goal is to try to be content, right? And be happy with your progress. You need to measure everything that you do, and that could be both spiritual and emotional, as well as technical. So, you write that all down, you keep a journal, I guess, which has kind of become kind of cliche, but you need to measure what it is that you're doing that makes you good, And then what of it could you augment to make yourself great? Sometimes it's deleting a step.
Right.
Sometimes it's external. Like, I knew a guy who was drinking like 14 Diet Cokes. And I'm like, so you really like to get jacked? I said, why don't you run around Central Park twice and then come back to the office? Like, so there's all types of external things that traders can do.
Yeah.
Take away half of the Diet Cokes and try to choke down a wheatgrass or two just to try it, see how it feels.
See what happens.
Yeah,
right.
just see how it feels.
Yeah.
So measuring behavior is huge. And then finding out that a lot of what people do, you have ritual versus routine, right? Which is a whole other podcast.
Yeah, I love that. I love that idea.
So find out in what you're doing if you consider yourself a good trader, which is largely subjective. If you're trading public money, are your clients happy? Now, if you feel performance-wise, you could up it a notch. Do you mean in your behavior, or do you mean that you think you can affect the market so that you can take 15% year over year to say 17% year over year? Because I'd like to know, when you figure out how to do that, please call me, because then I'll hire you. So be clear about what your goals and objectives are and what's actually possible. But I think absolutely you have to measure, or a person would have to measure their behavior and keep very rigorous things like time you get up. What do you do in terms of your diet?
Right.
If you want to be a high performance person, high performance is more a personality trait than it is in terms of trading results, because you're powerless over what the markets can do. Right. So yes, you can have a 3x system, but the sword cuts both ways. So you just be careful about what you look for, because yes, in raging bull markets, your 3x system looks amazing. Yeah. But if you've been trading a 3x system the past couple of years and you've been doing it for say 5 or 10 years, chances are you're in a drawdown or close to it, and you've had people taking money out. Mm-hmm. So just get very, very clear about what your goals are as a person, especially what your emotional goals are. Yeah. If you want to be famous, be an actress or an actor, or at least try, because the odds of you becoming famous as a trader are just as hard as trying to become Tom Cruise or Matt Damon or right. Meryl Streep, right? It's 1/100th of 1%, of the folks who consider themselves actors or actresses actually make any money doing it. So right. I think that answers it.
Yeah, that's great advice. Thanks for sharing, Michael. So let's wrap things up. So I'll just ask one final question. What's the best place, if people have liked what you said today and loved your opinionated ideas about what we've talked about, what's the best place they can stay in contact with you, where they can engage you or follow you further? Where's the best place to go?
Yeah, I guess the best place, if they want to see an amalgamation of the written word, the spoken word, and the video content, would be at martinchronicle.com. Mm-hmm. That's probably the best place to see it all.
Cool. And definitely check out Michael's new podcast, The Michael Martin Show. He's got a great set of guests and interviews on there as well. So it's another great resource.
Thank you.
Yeah. So let's wrap things up. So to the audience now. So as we usually do, I'd love to hear from you. So in the show notes today, or in the discussion forum, I'd love to hear what's the one biggest insight you got from this podcast. Because we talked about a lot of big ideas. What is the one thing you'd be willing to try or go deeper on? Share with us. Let us know. And as usual, you can find the show notes, transcripts, and all the resources we mentioned on this show at thetradingedge.org/episode 15. Michael, I really appreciate your time today. I look forward to doing another call, hopefully in the future.
Thank you for having me. It's been a pleasure.
Absolutely. Cheers.
You've been listening to the Trading Edges podcast. We've taken this interview and summarized all the big ideas so that you can take action. Just head over to thetradingedge.org/podcast to find the show notes, transcript, resources, and to continue the conversation.